I've been making my mortgage payments every single month, but guess what? At this rate, I will never pay it off. And that's because the mortgage balance is increasing, and it's actually higher now than it was when I originally put the mortgage in place back in February of 2022. But how is this possible? Well, if you're on a variable rate mortgage, you're going to want to watch this video because that is what I'm going to talk about today. Now, just before I get into it, if you're new here, my name is Andrew Stephens, and I've been a realtor in Halifax for 9.5 years. And if you want to be educated on the Halifax real estate market, then you're in the right place. So hit that like button and hit that subscribe button. And if you want to book a call or a meeting with me to chat about real estate anytime, you can do so in the Calendly link below in my description at a time when it's convenient for you. Now, before I get into this story, I want to make it really clear. I'm not complaining about my situation. It is what it is. This video, I'm making it more so to bring the situation to life and explain this to some people that might also be going through this, because there are, yes, a lot of Canadians going through this right now. And according to this CBC article from back in the fall, about 20% of mortgages right now with the big banks across Canada are negatively amortized, meaning their mortgage balances are increasing. So this particular property is an investment property that I bought in Halifax back in 2021. And at the time, I got a pretty good deal at it in a pretty hot market. I did an extensive renovation and then I refinanced it down the road in February of 2022. And it's funny because in 2022, when I was refinancing this property, I had a really hard time making the decision about what to do with the rate. Should I go fixed? Should I go variable? Or what was I going to do? And it's funny because now hindsight is everything. And truthfully, this was a very easy decision. And well, I chose incorrectly. So anyway, I refinanced this property and I put a new mortgage in place with an opening balance of $720,000. And at the time when I took this mortgage out, the variable rate was somewhere around 3%, give or take. I can't remember exactly. It was high twos or low threes at the time, which was a pretty good rate. And yes, I was expecting rates to increase. I think everybody was at that point. But no, I did not expect them to increase as much as they ended up going up. So the property was now fully renovated, fully rented, it was refinanced, I had great tenants, and it was actually my most lucrative property investment that I ever made, and it was cash flowing at about $975 a month at this time. And then, as you know, the rates started to increase. The Bank of Canada started to jack the rates up, and this is where my problem started. And my product in terms of my mortgage is the type where when the rates increase or decrease, my payment doesn't change, just the amortization on the other end of it changes. And by the fall of 2022, I had now hit my trigger rate, and this is again where the problem started because now I was in reverse amortization and the money I was putting toward the principal and interest every single month was not even enough to cover all the interest. So I wasn't paying down the principal at all, and my balance was just starting to increase. So at this point, I was moving backwards. In terms of the negative amortization, my balance was starting to increase. So the bank reached out and they gave me 3 options. The first option was locking in at the current fixed rate. So this option had my payment increasing about $1,500 per month, meaning I would then be losing about $615 per month on this property. Option number 2 was to increase the payments by 20%. Now, I wasn't loving this option and it had my payment increasing about $575 per month, but that was a lot better than it increasing $1,500 a month in option number 1. And option number 3 they gave me was to pay lump sums on the property to sort out the amortization on the back end. And to be honest, this is just not something I was interested in, mainly due to tax implications of me pulling more money from my corporation. So I ended up going with option number 2. So my payments increased by 20%. So this just cut into it a little bit more, but it didn't fully solve the problem. And yes, my mortgage at that point was still negatively amortizing. So even though I made that change at the start of 2023, I'm still moving in the wrong direction. So at the start of 2023, the opening balance on this mortgage was sitting at about $715,000. And after $34,000 worth of payments, the ending balance for 2023 was at about $723,000, so an increase of about $8,000. Now, these numbers are obviously rounded for simplicity of this video. So the question is, what Do I really think about this? How do I really feel about all this money I'm putting down on this mortgage that's not cutting into the principal at all? And well, quite frankly, yes, it sucks and it is what it is. And according to that CBC article, about 20% of Canadians are going through this right now, whether it's their personal home or an investment property or whatever it may be. Now, do I regret taking the variable rate in February of 2022 now that I see how everything has unfolded? Yeah, obviously, to some degree, I do. But at the same time, I'm intending on owning this property for at least another 10 years, but more like probably 20 or more years, probably right into my retirement. So, although it sucks right now, at the end of the day, it's not costing me anything to have this property in terms of out of my own pocket money. Although the mortgage has increased $8,000 in the last year, the property value has increased more than that. So I'm still in the green there. And also, these are the rents coming in that are covering this property. So it's not my personal payments going towards this from my own money. So I think I would feel a lot differently if it was my own personal home. Imagine if you paid 34 or 36 or $40,000 a year to live in your personal home, but you're going backwards and your mortgage is increasing. So that's what a lot of Canadians are dealing with right now. And I feel like if that was the case, I would feel a lot differently. But where this is an investment property, it's still kind of covering itself. Even though that balance is increasing, the value is increasing with it. So I'm still in the green technically, but no, obviously it is far from ideal. But in terms of a real estate investment, I'm in it for the long game. I'm in it for the long haul. I'm going to own this property for a long time. And by the time I go to sell it, I'm going to have a ton of equity in it. And the mortgage thing will sort itself out over the next couple of years. So either way, I will still be very happy about my investment in the future. Now, I took the variable rate for a couple reasons, but the biggest one is I want all my investments to be liquid. So I took the variable rate because when you sell, it's much less of a penalty. You're only paying a few months interest in terms of your penalty. Or if I wanted to refinance it and pull some money out of it for another project or another investment, I had the ability to do that. Whereas if I put a 5-year fixed mortgage in place, I'm going to eat my shirt on the penalty if I get out of it in the first few years. So that's a big reason why I like to go variable rate on my investment properties specifically. And yes, my personal home is a fixed rate, although it's up in August of this year. So hopefully things will be a little bit better by the time I need to renew that mortgage as well. Now, again, looking back, yeah, I could have made a better decision at the time, but I'm not going to beat myself up over it. I still have a great investment property. It's fully renovated. The tenants are great. It's not a lot of work to manage the property. It's close to my own personal property. It's in an area where the values are rising very, very quickly, and there's a ton of development going on. So I'm feeling pretty good about my investment overall at this point, and I think I'll feel even better about it 10, 15, or 20 years down the road. But the big thing this has me thinking about is how many Canadians are in this situation currently. Again, based on that article I saw by CBC, about 1 in 5, so 20% of Canadians right now are in this situation, and I'm sure a lot of them are in this situation on their personal home. And the fact that you're paying all this money on your mortgage, but it's not going down, would be a very, very hard pill to swallow. So my question is to you guys, if you're watching this video, are you in this situation or do you know people in this situation? And what do you think about this overall? If you're in this situation, did you try to go to the bank to work something out? I've heard a lot of the banks are working with their clients and maybe extending amortizations, which obviously doesn't surprise me because the longer that amortization, the more they're going to make in the interest over the years. So I think banks are going to work with people to kind of solve these problems, but it's going to solve the problem, yes, in terms of your mortgage will start coming down, but at the same time, it's going to cost you more interest over the years if you do extend that amortization. So I'm curious to hear from you. What do you think about this? Are you dealing with this personally, or do you have any friends or family that are dealing with this? And what are your thoughts? Don't hesitate to comment below. I would love to get some dialogue started down there. And if you're still here watching and you got any value out of this video, all I ask is that you hit that like button and you hit that subscribe button so you don't miss any of my future content. And that'll help push this out to more people like you who may be interested in seeing videos about the Halifax and Nova Scotia housing market. Now, until next time, thank you so much for watching. I really appreciate your support and have a great day.